There is only one country renowned for its natural beauty, active volcanoes, and peaceful people: Iceland. But an unfortunate incident happened that left an ugly scar on this secluded population and ripped it off its glory for 10 long years. This is none other than the 2008 Icelandic banking catastrophe. While tourists still recognize Iceland for its picture-perfect landscapes and that place where the movie Game of Thrones was filmed, financial professionals think of Iceland for one singular reason: the country with the single largest banking collapse in the history of the world. Currently, the nation is doing their best to erase this international reputation, and it is bouncing back to become stronger than ever. Before starting, make sure to click the like and subscribe buttons to stay updated with the latest content. The epic collapse became evident in the fall of 2008 after years of asset inflation and bad loans given out by the irresponsible and largely inexperienced Icelandic financiers. This unethical behavior displayed by Iceland's major banks and supposed financial professionals resulted in a national debt that exceeded 10 times the little country's gross domestic product in the years that followed. Only after the country went bankrupt did the country realize that it has been making some banking blunders, and then attempts to correct it began through a series of emergency measures designed to mend and stabilize the economy back to its pre-crisis state. Right now, the economy has recovered notably well, so much so that financial analysts now call Iceland's economic recovery a European success story. The Icelandic currency, the krona, has rebounded, the real estate market is now improving, and the economy has begun to pick up along the vibrant, tourist-ridden streets of its capital city. As a result, the Central Bank of Iceland, which has managed the country's government debt since 2007, is now considering a return to the international debt market as well as the removal of Iceland's capital controls, which have helped guide the nation back to stability. The recovery was so dramatic that those who have experienced it firsthand summarize Iceland's story as a nation that moved from being a prosperous international player to a bankrupt punchline, and back to a European model for financial recovery, all by the influence of its banking system. Let's take a rundown through the story of the famous Icelandic banking system. During the early 2000s, Iceland saw an unprecedented boom led primarily by its banks. The country's top 3 financial institutions, Glitnir, Kaupthing, and Landsbanki, rapidly built their international operations, attracting huge torrents of cash from around the world. By the end of 2007, the country's banking system had transformed into a global giant, whose assets were 9 times the size of the country's GDP. Things were going on well until the fall of 2008, when the good times came to an abrupt halt. At that time, Lehman Brothers was collapsing in the U.S., and the Great Recession was wreaking worldwide havoc. While all 3 banks collapsed, Iceland's currency, the krona, lost 50% of its value, all between 2007 and 2010, and the country went into a grave economic meltdown. It took only a few days for Iceland's banking sector to go under, and while this happened, nearly every business in the country went down with it, until they fell deep into bankruptcy. In a situation where many other countries, including the U.S., deemed their banks too big to fail, Iceland decided their banks were too big to save. So the banks were nationalized and split into domestic and foreign operations, with the government guaranteeing domestic deposits whilst abandoning the foreign operations side. Also, a program of widespread debt forgiveness was implemented for citizens, and the currency was allowed to devalue by almost 60%. This was done to increase demand for local products on the international market. Also, it is very interesting that Iceland was the only country who prosecuted bankers as criminals for the damage they had caused to the economy and society. Iceland's crisis was attributed to mistakes the country made when it opted to privatize its banks during the 1990s. Instead of inviting international bankers who had expertise in privatization, Iceland's government, led by Prime Minister David Oddsson, handed the banks on a silver platter to local inexperienced bankers, and like some analysts expected, it took them only a few short years to drive the banks into the ground. Although it didn't take long for the country's economy to be destroyed, it took 10 long years to get it back on its feet. What makes the story behind Iceland's recovery spectacular is not simply that it recovered. Iceland's recovery is notable because of its priorities. The decisions made about who to protect while trying to recover and who to shoulder the cost of recovery on. When viewed from a standard economic policy perspective, Iceland's response would seem strange. But from the perspective of a country whose objectives were to stabilize the economy and protect citizens' well-being, the policies would make a lot of sense. Now, over a decade later, Iceland has risen from ruins with foreign exchange earnings increasing greatly. It is no doubt that one of the strategies that helped in Iceland's recovery was concentration on the industries where it has comparative advantage. With tourism emerging as the primary source of foreign exchange earnings, the country has risen to be among the top GDP growth rates in the world. For a country whose population in 2017 was 340,000, Iceland attracts massive numbers of tourists, over 2.2 million a year. The GDP growth rate exceeds 7%. In fact, the World Bank Group notes that GDP has bounced back from an unfortunate place of about $12 billion to way over $20 billion today. Also, employment has been at an all-time high. Interestingly, Iceland's economy depends heavily on the fishing industry, which provides 40% of export earnings, more than 12% of GDP, and employs nearly 5% of the workforce. In the last decades, the country maximized the advantage they had over the fishing industry to boost the economy. The economy has also been diversifying into manufacturing and service industries in the last decade, particularly within the fields of software production, biotechnology, and tourism. On the expenditure side, household consumption is the main component of GDP and accounts for 53% of its total use, followed by government expenditure, which accounts for 24%, and gross fixed capital formation, claiming 17%. Also, cryptocurrency mining enterprises have been an addition to Iceland's economic landscape, but the country has refused requests from new customers for buying energy to mine cryptocurrency. The low cost of power required to mine new cryptocurrency in Iceland, and the abundance of geothermal energy was what attracted these enterprises. And the miners harvest this to create a cheap and plentiful supply of renewable energy. In fact, some companies in other countries have set up shop in Iceland, including Canada-based Hive Blockchain Technologies Limited. But that apart, several industrial customers, such as aluminium smelters and data centers, have also been cut off. And according to sources, the factors that led to the reduction in supply were low hydro reservoir levels, a power station malfunction, and a delay in acquiring power from an outside producer. Also, a new study found that the cryptocurrency, Bitcoin, requires a lot of electricity, leaving a significant carbon footprint, one that rivals the environmental impact of Las Vegas or a small country like Sri Lanka. Each year, Bitcoin generates about 22 megatons in CO2 emissions, the researchers estimate, which is very discouraging to any nation from which it is mined. Notably, this isn't the first time that Bitcoin mining operations have been questioned around the world. In fact, two of Sweden's director generals recently proposed banning crypto mining to meet climate obligations. Also, in September 2021, the Chinese government imposed a blanket ban on all forms of cryptocurrency trading. So it should not come as a surprise that Iceland has decided to do the same. In spite of the numerous challenges, Iceland's GDP has continued to rise from 2018 till now. In the fourth quarter of 2022, the economy grew by 3.1%. even though it was lower than the upwardly revised 7.5% expansion in the previous period. This figure also happens to be the weakest growth since the first quarter of 2021, and this is mainly due to the smaller increases in private consumption, government spending, and gross fixed capital formation. Still, in 2022 in net trade, both exports and imports rose at a softer rate of 10.7% and 10.5% respectively. On a seasonally adjusted quarterly basis, the economy rose by 2.2% after a previously revised 0.2% growth. And for the whole of 2022, the economy expanded by a whooping 6.4%. For a little country like Iceland to rise from the depth of ruins to wealth It is no doubt worth studying. What do you think about this amazing economic transformation? Do let us know in the comments. Also, please like this video and subscribe to this channel for more. See you soon.